Everybody, welcome back to Ox Talks. Appreciate you tuning in today to watch the program. If you're not subscribed to the channel, please subscribe. It doesn't cost you anything. Please support the channel. Hit the thumbs up button and the bell notification as well. As I discuss all the time, please continue to share these videos with as many people as you possibly can so we continue to get the word out, wake people up, educate people, and continue to strengthen this community, all right, as we ride through this economic turmoil together. I saw a story out of Yahoo Finance today dealing with Walmart I thought was worth sharing with you, giving you my 2 cents, because we discuss all the time about how the narrative and what is put out there by mainstream and by big companies is oftentimes very different from what the average person is going through in their daily lives, struggling to make ends meet, to pay all of their obligations, and in many cases going into debt to do so. So when I read an article like this dealing with Walmart today, and more specifically Walmart's CEO out touting the resiliency of the U.S. consumer, I think it's worth noting. The story says Walmart's second quarter sales were stronger than expected, boosting optimism that the U.S. recession could be, or a U.S. recession could be averted. This was quite the opposite of what Home Depot told investors some time ago. The good news from the world's biggest retailer helped restore confidence among investors and other analysts. So let's break that down. Not only do we hear from Home Depot, it wasn't some time ago, I think it was like last week or the week before, we also heard from Lowe's, and we've heard from many other large retailers that the consumer is not on solid footing, the consumer is not doing well. We know that the consumer debt continues to exponentially rise in this country. But let me go back to this statement. The good news from the world's biggest retailer helped restore confidence among investors, that is, their shareholders. Discussed on this show all the time. A corporation's only goal is to maximize return for their shareholders, maximize share price, maximize dividend distributions, and keep the investors feeling warm and fuzzy so they keep buying the shares of stock. And other analysts. The analysts are the ones out there pumping the stock, giving it a buy signal, giving it upgrades or downgrades in some circumstances. So what's the goal here? The goal is the company goal is to keep the shareholders happy, to keep the shareholders confident that the share price will continue to go up, so they continue to add to their positions and buy more stock in the company. Or at a minimum, don't sell their stock in the company, okay? But the thing is, people read these headlines or they read the story, and the takeaway is that everything is great out there. The consumer's strong, the consumer's out spending money, the consumer's resilient. This is Walmart, probably the best gauge of American spending, as it took $1 in every 12 spent by shoppers in the U.S. stores during the quarter. Let me repeat that. What it says is that Walmart took in $1 of every $12 spent by shoppers in the U.S. stores during the quarter. That's amazing to me. Announced that sales went up 4.2% in the quarter to June. These results were much better than expected, and the company's shares, it says, rose by 6% in early trading. This article came out this morning. I just checked, the market closed, and the stock finished flat from what I could tell. So the 6% gain or bump it got from this story this morning did not close that way today. It says the rally follows more than 30% year-to-date gains in Walmart shares, which generally set the tone for the broader economy. So, of course, they're getting 30% gains on shares that says year-to-date. That's massive return. They don't want to do anything to disrupt the sentiment among their shareholders and the analysts. But here's what I don't understand. It says this generally sets the tone for the broader economy. How does, you guys answer me this question, how does an increasing share price in Walmart's stock set the tone for the broader economy? How are the two, unless I'm missing something, how are the two related? You think that Walmart's shares of stock appreciating 30% this year helps the man and woman on the street that just lost a job, or that can barely afford to put food on the table, or that are going to that are actually swiping credit cards and borrowing off credit cards to contribute to these Walmart sales? I would answer the question that it does not. Walmart CEO, here it is, Doug McMillon, further instilled confidence in retailer performance and the overall economic outlook on an earnings call with analysts. On these earnings calls, guys, I have friends that go on these calls. They are to analysts and shareholders. They're not to the people necessarily that are in these stores buying the food and the consumer items at these stores. Okay, what you're seeing is the people that have the money that are basically buying up the shares, and the analysts that are pumping the shares. We're not seeing. This guy says, CEO Doug McMillon, he says, quote, we're not seeing a weaker consumer overall. He said, pointing out that consumers can still spend resiliently despite ongoing economic challenges. So what does that mean? What exactly is a resilient consumer as used in this article? Is a resilient consumer one that does not have even $400 in the bank to cover an emergency? Is a resilient consumer one that is tapping out their credit lines and won't be able for long to even finance the purchase of things from Walmart? How do we define a resilient consumer? I guess it's a consumer that simply can get through the checkout stand and complete their order by whatever means. I'm assuming that's how we're defining resilient consumer. Because if you were to really drill down in order to analyze that properly and accurately and honestly, you'd have to figure in the debt levels that are associated with these resilient consumers. Wouldn't you have to also include that analysis? He emphasized that Walmart can maintain strong sales without slowdowns in other industries. The better than expected outcome has led the company to increase its expectations for the remainder of the year, underpinning confidence in the U.S. economy's capacity to avoid a downturn. And again, I suppose that's based upon the fact that the consumers in their stores are able to complete their purchase in the checkout line by whatever means. Somehow that translates. Again, I'm being facetious in a lot of this. I don't usually like sarcasm, but this stuff, you really can't make it up. It's laughable. The Walmart news was timely, and gave the stock market a much-needed boost, with the S&P gaining 1.5% and the NASDAQ surging 2.3%. Again, it's all about keeping the stock market high, keeping share price high, keeping investors happy. Investors, it says, are optimistic that the economy can bounce back. And some analysts speculate that the Federal Reserve will cut interest rates as early as September. The possibility of rate cuts added to the momentum of the market's trajectory, given that lower interest rates would support the economy. This article came out today on Yahoo Finance, but it's interesting in looking at the context if it's referring to market conditions today, or even referring to immediate instant release of this data. And if it's not, then it's even more intended to basically fool the masses, right? To get them thinking that, oh, this is current news and everything is great. Look, if people are spending money at Walmart, then all is supposedly supposed to be good. This is a quote: "We're back to an environment where good news is good news and bad news is bad news," said Brett Kenwell, an analyst at eToro. Kenwell added that robust retail sales tempered fears of an imminent recession. But he also says this might give the Fed more time before deciding on rate cuts. He mentioned the Fed is walking a tightrope between fighting off inflationary pressures and boosting economic growth. Again, we heard from the Fed on Friday, and the indication, at least from Powell's speech, was that the Fed was going to be embarking on a rate cutting cycle. Okay? So, and the article concludes by saying, according to the Commerce Department, U.S. retail sales surged by 1% in July, the largest since January of 2023, with gains in autos, electronics, and appliances. This indicates that the typical American consumer was perhaps more resilient than some had feared. I don't see the connect there. If just because the consumer has maybe another few dollars left on their credit line, or a few dollars that they can squeeze out of their home equity line of credit to go out and buy a new television, right? Or to go out and lease a new vehicle they shouldn't be leasing. I don't see how the two are connected. But again, you get fed these broad sweeping conclusions and generalizations, and people believe this stuff, right? And it changes sentiment. It influences behavior. I won't go too long today. That's my Walmart rant. Thought it was worth sharing with all of you. I had no idea that Walmart took $1 in $12 spent by U.S. consumers. Again, I haven't checked that beyond what this article said. But with that being said, I will talk to you all soon. Bye.